Good morning, team. I hope you are all well, of course, and had a great weekend. Just a quick market recap. Thought it'd be easier for you guys, especially on a Monday morning, as we typically do not go live in the market till we get a bit more clarity. Sometimes we can see a bit of momentum, a bit of movement just after the open 10, 10:30, 11, where we may start to see some opportunities pick up. Personally, I do try and wait for the American Open in the afternoon just to understand what we're seeing, how we're seeing, and has the pattern from this morning carried through to the afternoon, which is typically what we should be doing every day, but obviously paying a bit more attention on a Monday where the market has been shut over the weekend. So, first of all, dollar index, we will start now. We're in quite an interesting position here. Obviously, highlighted here is the 97 region, which ideally we wanted that bounce below previously. Price is now tied up in and around this 200 moving average, where, as we know from previous, price can use the 200 as a level of support, resistance, rejection, so on. So it's quite interesting the fact that for the last 3 days or 2.5 days, including today, we've failed to break that. Now, we do tend to see dollar drop towards the end of January. So what I feel we may see is some consolidation in here before the move lower. Now, if we did see a burst of strength, I mean, with everything that's going on in the world, if some sort of volatility kicks in, it's not going to catch us by surprise. We then may see a push up to the 98 region. Now, that will come in line with bearish trend line and everything else. Technically, yes. I probably won't be a buyer in here. Depending on the weight of the other currencies, I'd ideally like to wait for the longer move towards the downside. And yes, a lot more probability of making money, a lot more opportunities, and so on. We may not see this push up to 98. To be honest, I think we might consolidate and then see a move towards the downside. So just bear that in mind. Now, if you are looking to be a buyer of the dollar, we've got an obstacle in the way, haven't we? So if we are looking to be a buyer of the dollar, wait for that clean break first and then look for your opportunities up and above. Don't try and get caught up trading when you've got 9 pips into 50 and a 200 moving average and a previous level of support. So it's all about cherry picking, especially when we don't have clear clarity of what the dollar's up to. For me, this is just a strong phase 2 before a move towards the downside. So just bear that in mind. But yes, if we do kind of see a clean break, then you may see another rejection into this region and then back down in and around that 98. If it breaks 98, which to be honest, I don't think it will do, but then you'd look for an extreme bullish confirmation to take that move as a continuation. But worst case rejection short in here, but I think we'll consolidate and then we'll see a move towards the downside. So don't be too harsh on yourself if you're not finding any dollar related trades today. You may be picking some of the other currency cross pairs over a dollar just because we haven't got that clear clarity of direction. That obviously takes us over to euro. Now, if we're looking for dollar shorts, then that means we should be looking towards euro longs, which teeing up technically does suit, right? Yes, we've got support meeting, but more importantly, this pattern is what we identify as our trend-based pattern. When we see this pattern, cyclicity of higher highs, higher lows, we know we'll feel at home, we're at comfort, we know how to trade these positions. Something that's also is quite interesting, as you can see here. Here's your level of resistance, previously support, or resistance, rejection, support, failed to break, down we go, and we're now sitting in here. So again, if we're looking at euro longs, well, from current price to the next level and the 200 moving average is about 40 pips. So this is where we need to say to ourselves, okay, if I'm taking a daily trade, let's imagine this bar closes the way it does. I'm risking, let's say, 30 pips to gain 40 pips. Yes, it's more than a 1-to-1, but is that a high probability trading setup? Probably not. So where does the confirmed buying kick in? Well, confirmed buying kicks in when we're here. Anything above the 1165 region. Because you've got all of this room to move into. So try not to get caught up worrying about taking an early entry in here when we can wait for confirmation where cyclicity will move well and will provide us with tons of opportunities. You've also got to remember the 200 moving average is the strongest moving average on our chart. Obviously, we're basing it over a long period of time here. So as price is below the 200 moving average, it's showing for the last 200 days, there's been a bearish approach. As soon as price breaks above the 200, we're now stronger than the average price of the last 200 days, which again is a significant point. If we look when price crosses the 200 previously, we're in a strong uptrend. Price broke the 200, and we've been in a downtrend pretty much ever since. And you're talking that was, sorry, bear with me, I've just changed chart there. You're talking that was April 2018. So this is when we can spend a bit of time looking at the higher time frames, looking at the context and understanding of where we are on the chart. But because the dollar's not giving us what we want to see, we're currently in this region, I think we've got to wait for that clear-cut break above to show us the confirmed direction. Now, on the smaller time frames, you're going to start to see cyclicity move, because this is obviously the end of our downtrend. Price has now made a higher high, higher low. So what was in a downtrend doing this is now looking to do this. So you may find a high risk to reward entry where you get your next cycle above the 1 hour 200 moving average. Now, if you take an opportunity in here, we may still have 30 pips to that level that we discussed, but your stop loss may only be 15 pips because the size of the bar is smaller on a 1 hour chart than it is a daily chart. So that's where you can risk 15 pips to gain 30, bank a 2-to-1 risk to reward ratio, and be in a position protected, looking to stay in the market if it breaks above that region. From where we're sitting now, there's nothing exciting. If you look from a 4-hour time frame, this is where time frame agreement's key. Your 4-hour is indicating lower highs, lower lows. But this is where we need to make the decision. Because essentially this area in here is just phase 2. And I'm just going to put a trend line through, or I suppose there's a trend line through already. This is here, look, it's just phase 2 of the daily. Now, you must always respect the higher time frame. Follow the higher time frame's direction. When you've confirmed that direction, you look for agreement from the lower time frames. We're in a position now where we may break below, because if that dollar does give us that push to 98, then euro dollar will come lower. Or we're in a position where phase 1 might start and move again to the upside. So we've got to have an understanding where I don't want to take a position short. Although, I mean, we've got this support line and the moving average is tied up, so that's not a nice opportunity. If price broke below, then potentially. But this is just a clear-cut example to respect the higher time frame. Once the higher time frame is trending, so you can see here, you've got 4 days of buying. On your 4-hour time frame, you've got all of this to find an opportunity. On your 1-hour time frame, you've got a couple of cycles in here, and you've got a couple of entries in here. And then if you dropped again because you found the daily, 4-hour, 1-hour are all trending, 15-minute chart, you find tons and tons and tons of opportunities in trend. So that's what we're looking for. Clear-cut direction, and then a move on any of the time frames in agreement with the direction that we're trading. Now, where we're currently sitting in here, as you can see as I zoom down, I'm just going to take you back to a weekly chart. We're very, very low on the chart. So if we do fancy that bull run, remember I said to you when price dropped below that 200, that was middle of April 2018, nearly 2 years ago. So we could have a 2-year bull run in here. So if we find that early entry, you confirm the direction, you'll be able to cherry pick opportunities on all time frames. Okay, pound. Pound is beautiful setup. If you go back to my videos last week, I said this was the confirmed lower high, and here would be our first target, that previous low. And we're actually very, very close to that low now. You're only just under 100 pips away. From the right shoulder to where we are now is just under 300 pips away. So a good solid move. Now, if price was to break this, then your next target would be the 200 moving average. So essentially you're looking at another 200 pips of dollar selling. Now, I did say to you guys that we may pick some of the cross pairs over pound dollar. Reason being is because to help pound dollar go lower, we need to see a strong US dollar. If we're looking at dollar index, we're a bit undecided, aren't we? Do you remember? Because we said we may see a push to 98 or this bearish channel. not top of my list, but I think price may range before a move lower. Dollar weakness, pound weakness. Yes, you'd think it would fall through the floor. It really doesn't. We need one weak currency, one strong currency to see any type of push, any type of movement. So that's why all the time dollars threatening that little bit of a bull run, that little bit of a push higher, we can short pound dollar. As soon as dollar weakens off and pound's still weak, then we move on to the cross pairs to still find a strong versus a weak. That would probably be euro pound, because if euro's looking at pushing up, pound's looking at pushing down, then you may look at euro pound long, because that would be strong versus weak. But we can come on to that in a moment. In terms of opportunities, yes, we saw some nice interactions last week off the 20 moving average. Some of you took some great opportunities in here. There's another one here. Well done. And guys, by the way, keep sending me your profit shots, because it's really good to see. Successful trading entries, profit shot, anything you're proud of, send over. And again, if you hit a rough patch and you can't see the reason why, send it over. Let's have a look. Is there any clear patterns of things you're doing right that we can continue to keep you doing? Anything you're doing wrong, then we can pick up and perhaps add an additional in place that will support this. So in terms of where we are now, just look for that break of the 50. We're sitting on support at the minute. I do see a further move to the downside. Aussie dollar, as we can see, Aussie dollar is, yes, we're forming nice higher lows. So there's buying pressure being pumped into the market now. Now, 69.30 was an area where I think I mentioned to you guys last week, where it was sitting at support in here, wasn't it? Previous resistance, back in support, and so on. So we may be interested to wait for a rejection off of 69.30 to look for, again, this could be a head and shoulders short if we do see that dollar push. If dollar weakens off, then to be honest, I want to wait for a move in this zone here. So I want to wait for something like that to lead me into the market. Now, we may not get that because your daily chart may just do this, right? And just show a bull run until it pulls back. So all the time we're in this area, your 4 hour and your 1 hour is going to cycle, isn't it? So you may get this on a smaller time frame. So we're still looking for that buy if the dollar weakens off and Aussie picks up strength, and this is a phase one back long. 69.30 is your area to look for a buy. Regardless of time frame, just make sure they're all in agreement. But I am interested to see if price does do this. And then again would be a buyer in here, which again is a cheaper price to buy at. So a few more quid on the table. But use this as an interesting point. Do we really want to dive into the market when we're 25 pips away from a strong level? Probably not. And that 200 moving average is in the way. So once we get clear direction of where the daily chart's heading, look, if we break above that, you've got a lot of room in here to catch multiple pullbacks on all of the time frames. So we don't have to dive in for 25 pips till we get clear clarity, is what I'm trying to say. The market's in a position now where a lot of the majors are changing phase, changing trend, changing direction. So when we're in this position, you've just got to be strong, be disciplined, stick to your plan, stick to your rules. We can go through Monday, Tuesday, Wednesday not placing a trade, but take 6 on Thursday and 9 on Friday, which makes up for the week. And you'd rather be picking quality over quantity than getting caught up in a muddle of mess, which is where a lot of new traders go wrong. They feel they feel the need to take a day off work and think, right, it's 2 o'clock in the afternoon now. I haven't done anything. I'm not going to make any money. And what we've got to put ourselves in a position is to say, well, it's not a problem because I could make 40% in 12 months, but make 10% a month for the last 4 months of the year. And this is where we've got to think. It is the bigger picture, the long run. As long as you're consistent and sticking to your plan, everything else will fall into place. Okay, dollar Swiss. So dollar Swiss, I kind of said to you guys, this is all phase 2. And as you can see here, phase 2 is not clean. When we're selling, we see nice, strong selling bars. When we're in phase 2, that is just choppy, messy price action. As you can see, it's very messy. So trying to find textbook entries with a small stop loss in phase 2 is difficult because, look, you've got all of these spikes and a bit of mess out there and so on. So we want to put ourselves in a position where we're trading back with the trend, increasing probability of making money. And 97.80 was an area that I picked out to look for that reversal. So you're sitting in now around 50 pips away. So For those that are going to be a short-term buyer of the dollar, then you've got 50 pips to make some money, potentially. If we start to see price action consolidate, bearish price action in and around this 97.80 region, then that's when you'd look for your sell-off and the area to decline. So just keep your eye on this one. In terms of the smaller time frames, it's, again, you're getting nothing exciting. We're stuck on that 200 now. So once we get clarity, we'll then find the direction. Kiwi, interesting one with Kiwi. Now, from a daily perspective, this is very, very nice. This meets our core rules, right? Everything is in line for a buying opportunity. Why are we not taking it? Well, we haven't got clarity on what the dollar's up to. If dollar has that push higher, then Kiwi's going to continue to move a little bit lower. So we need to wait for the dollar to weaken off to find our cherry-picked entry to take this market back long. So again, don't be afraid of using the smaller time frames to get in once we see that move take off. So interesting around here. I'm going to wait for the daily close tonight to see how well this performs and to see how we open up in the afternoon as well. So just to get a little bit more direction and clarity in here. Now, if price was to move towards the upside, we could look at a target anywhere between sort of 66, 70. So you've got about 130 pips. 130 pips to play with. Yeah, I mean, just before the previous highs, you can see there's a level in place here, 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 and so on. It's very messy, this chart, from a longer perspective. So 67.70 could be the next push just above previous high, and then it could form a double top, and then we may see a move lower. So just keep an eye on this one, guys. In terms of a smaller time frame perspective, if you look at last week and the back end of December, you had multiple opportunities to trading here. So again, we told you the direction. You knew that the market was trending. There's no reason why you shouldn't have taken advantage of at least some of these. In terms of actually cherry picking, you have plenty. Every time we pull back to that 20, we're seeing bullish price action. All of our other rules are aligned. We take that opportunity. So just from where we're sitting at the moment, it's for me, it's still in a phase 2. So if you are looking to be a short-term buyer of the dollar, then keep targets nice and small. If you are looking to be patient to wait for the longer-term move towards the upside, then just wait for a slightly more confirmation. Dollar CAD, again, I sort of use this 30-50 region as a potential rejection zone. So sell stops may be in place below the previous low, allowing you a 32 pip buffer from current price action. Not looking to be a buyer of this chart until dollar weakens off and we see a move towards the downside. In terms of technicals, as you can see, this is quite a clear break and retest if we do interact and start to form bearish price action. Yesterday's or Friday's candle, indecision candle, inside bar from the previous. So we're showing here that the buying is less strong as we're meeting the level on the 20 moving average. We're starting to see an indecisive positioning. So all we now need is a couple of bearish bars to then take us towards the downside. Dollar Singapore. Dollar Singapore is quite an interesting one as well because I highlighted this area similar to dollar CAD where we saw the previous support, break and retest, move lower. Now, I only like trading dollar Singapore when I have a clear understanding of what the dollar's doing because, as we know, Singapore dollar isn't one of the strongest majors. So, yes, this was a technical short, and if you did take this, you'd be 20 pips up. So, from a daily perspective, not bad. Previous low has another 30 pips, so you definitely can get yourself to break even now. I will probably be a momentum-based trader of dollar Singapore short once I see that clear move lower. But as you can see, since we had this rejection in here, we've cycled pretty well. So we may see a continuation in this. If not, use the smaller time frames. As you know, just look for pullback into the 20 and another move lower. So if the dollar does start to weaken off today, then here is your first textbook entry after the cross of the moving averages. We haven't quite pulled back to the 20 on the 1 hour. These would be a 15-minute and a 30 or a 15-minute entry. But if we can get a clear 1 hour pullback and bounce, it may give us a good opportunity to trade today. Now, dollar yen. Dollar yen is an interesting one. We're back above that 109.70 region. I'm not looking to be a buyer of here. We've got tons of room for the market to drop. Seasonally, we were looking for a match as well. Just need that dollar to weaken off. So I'm not worried about the break of pattern in here, because ideally we wanted it to reject this level or form a lower high to look for a move towards the downside. As long as we start to see some clear cyclicity, then again we can take advantage on the smaller time frame. So my next move here, if I am looking for a short, would look for either an exhaustion candle to take a limit order, or wait for something like this to kick in place, and that would be my first position to the short. So lots of opportunities teeing up. Definitely, we just need to wait for a little bit more confirmation. There's no need to dive in head first and jeopardize a percentage of our account. I'll just show you euro pound as well from where we're currently sitting. So euro strength, pound weakening off. If we see that happen, as you can see, we're now starting to form this pattern. Everything else is in order. What we need to do in terms of entering now, as you can see, there's your clear breakout. Everything, all moving averages in order, price aligned, RSI pointing up, momentum to the upside is just a bounce. So look for something like this on euro pound. Probably see it this afternoon. If we do see it, then take advantage. Couple of other opportunities as well. I mean, we've got tons out there, tons of cross pairs that are teeing up as well. If you do have any questions regarding a certain pair, then drop me a message. But from where we're sitting at gold, because I know all of you love trading gold, this is the pullback that's well overdue. So textbook setups will come back in at 15.22 to look for longs again. But all the time we're in here is short-term selling. As we know, gold can move extremely quick. So just be in a position where you can protect yourself as soon as possible. Currently sitting at the 200 moving average, it would have to break below for me to be a short, or for me to be a seller today. I'm just going to keep an eye on it until the market opens up. In terms of equities, equities are still threatening along. We're breaking all-time highs still. You look at S&P. S&P is trading at 3,277 currently. All-time records. Do you buy at all-time records? Typically not. We need to wait for some sort of pullback and protect yourself as soon as possible. For some of these equities, yes, they're well overdue a pullback, but if you are 15, 20 pips in front, I'd definitely get yourself to break even. Therefore, you cannot lose. And you know how quick indices can move, so you can easily get 100, 200 pips once you see momentum kick in. But first of all, be protected when you can, because then it takes away the emotions and the risk out of your trading, and you can just let the market roll. Okay, guys, have a great day. Any questions, get in contact, and I'll see you all soon.